Good evening. It is Thursday, April 19th, 10:45 p.m. I'm getting this video out late, but I wanted to get it out because it's going to be a long night, a long battle throughout the night and into Friday as gold tries to hold on to 1340 for the third consecutive day. Now, right now, as I do this video, gold is under a little pressure. It's down about $3 at 13.42. The last time I checked a little while ago. Today, they tried to hit it down below 13.40. They were unsuccessful. Yesterday, it held 13.40. The day before, Tuesday, it briefly went below 13.40 and came back. So I snapped this picture. This was at 11:51 New York time. Gold was down $8. It had a low of 13.40.10. Now, the next picture I want to show you this blue line is the April 17th. You can see it briefly went under 13.40 and then came back. The red line was yesterday, always above 13.40. And then the green line, if you look at that green line right there, that's the picture that I had showed you before, where they tried to take it below 13.40 and it hit right there. So we're going to see, because as you know, people, since I started doing these videos, and even before that, 13.40 has been my key number. And I said I would not call a bull market in gold until gold took out and held 13.40 for 3 consecutive days. And we are on the eve of that right now. So I'm going to watch it throughout the night, and tomorrow will be very interesting. But we're right there, people. I've been saying this whole week and last week that we're on the cusp of what I believe is a tremendous breakout in gold. It's been consolidating. It's been basing for months. It's banging on the door. I said in my last couple of videos how I love the price action in gold. And I think that's been confirmed of what's been going on with silver. Silver had a tremendous day yesterday. And silver was actually up today while gold was down, which happens on rare occasions. And I believe that's a very, very positive sign. Somebody asked me in the comments the other day what I thought about silver. And, you know, there's always this debate, silver will beat gold, gold will beat silver. I believe if gold does what it's going to do, silver will follow. So that's where I'm standing on. Okay. So silver had a great day yesterday. So we got to watch that. So just want to share a couple of articles with you. You know, all these Fed heads are coming out. You know, there's this May FOMC meeting. They're all coming out. They're all over the board. Okay. They were all saying what they think the neutral rate is. They were all basically saying we should go a little more aggressive, we should slow down. But I don't want to get sidetracked. The world's debt load has ballooned to a record 164 trillion. This is what it's all about. I don't want to hear the trade wars are on, the trade wars are off. Syria, we bomb them, we won't, we will again, this and that. That's a distraction as far as I'm concerned. I said, I'm not following anybody. Okay, even Zero Hedge gave up on that long ago. I showed you that article. I think it was a week with these clickbait headlines. The world's debt has ballooned to a record 164 trillion, a trend that could make it harder for countries to respond to the next recession and pay off debts if financing conditions tighten, the International Monetary Fund said. Global public and private debt swelled to 225% of global gross domestic product in 2016, the last year for which the IMF provided figures. I wonder what it is now. The fund said Wednesday in its semi-annual fiscal monitor report. The previous peak was in 2009, according to the Washington-based fund. 164 trillion is a huge number. Yeah, you better believe it is. Vida Gasper, head of the IMF's Fiscal Affairs Department, said in an interview, "When we talk about the risks looming on the horizon, one of the risks has to do with the high level of public and private debt. The global debt burden clouded the IMF's otherwise upbeat outlook of the world economy." How could you have an upbeat outlook of the world economy with 164 trillion in debt? The fund on Tuesday forecasts expansion of 3.9% in 2018 and 2019, while saying in subsequent years the global economy could be impacted by tighter monetary policy and the fading effects of U.S. fiscal stimulus. Surging private sector debt, particularly in China, is driving the buildup. China has accounted for almost 3/4 of the increase in private debt since the global financial crisis, according to the fund. So it goes on to say it's a long article, but I think you get the point. This should be our focus, people. And I think gold is tipping its hand and showing that. Now, then we have Dudley comes out, okay? And he says, strong economic growth and higher inflation don't necessarily mean Federal Reserve officials should speed up interest rate increases, New York President William Dudley said. Even though the unemployment rate is low, inflation remains below our 2% objective. That's that Phillips curve. That's what they think and what's going to cause inflation. Maximum employment. As long as that is true, the case for tightening policy more aggressively does not seem compelling, Dudley said Wednesday in remarks prepared for a speech in the Bronx. My conclusion is reinforced by the fact that we do not know with much precision how low the unemployment rate can go without prompting a significant rise in inflation, he said. That's how they think they're going to get inflation. Maximum unemployment. The Phillips curve. Discredited, okay, of no use. Dudley, who is retiring in June and will be succeeded by San Francisco Fed President John Williams, said although the Fed won't necessarily have to tighten quicker tightening, interest rates may need to ultimately be raised to higher levels than previously envisioned. The so-called neutral rate, which Fed officials say will keep inflation steady, is probably 3%, Dudley said. Yeah, probably 3. Some people say it's 2.5. Some people say it's 3. This neutral rate. Projections released following the mid-March meeting of the U.S. Central Bank's policy-setting FOMC meeting showed that the medium committee participant estimate of the neutral rate was somewhere in the range of 2.75 to 3%. So in any event, they're very close to neutral already. And if that's their target, to get to neutral, not too hot, not too cold, and gold is already hanging in there, I think it speaks volumes. So this is what we have to watch for, people, also. So that's pretty much it. It's going to be a long night, like I say. One other thing I wanted to mention, I was talking to a friend of mine. I was telling him about, I'm doing these videos, and I told him James economy, gold update, and he was a little confused because I put in my videos, the gold update with the date. So he says, "Is all you talk about is gold?" I said, "No, I try to talk about the economy, stocks, bonds, real estate, whatever it might be." So I'm thinking in the title, instead of the gold update, I'm thinking the economic update. And instead of just the date, I'm going to start trying to put a little sentence about what the main crux of the video is all about. Like today would be 164 trillion in debt. Okay, the debt bomb. All right. And also, if possible, I'm going to try, as I read these articles or charts, try to provide links to the source. So that's it, people. Just stay the course, hang on. It's going to be very interesting. The battle is just getting started, and it is a battle. There's no doubt about it right now. The 10-year crossed 2.9 today. It had gotten to that level a few times this year and backed off it. So once again, we're going to see if we can get the 10-year up to that crucial 3%. So that's a battle. The US dollar and the Japanese yen are battling. The dollar has gained a little against the yen, okay, but it really hasn't gained much against the basket of all the currencies that it's in. It's 89.92 the last time I looked. Can't seem to stay above 90. I had said several weeks ago it looked as if all these asset classes were just kind of consolidating. The 10-year, certainly, the dollar, gold, stocks, and when they were done consolidating, I was of the opinion they would continue in the trend that they were in before the consolidation. So that would mean gold up, 10-year interest rate up, dollar down, stocks down. So there's all fronts right here going on right now. So that's about it, people. Just hang in there, stay the course. I really think the light at the end of the tunnel has never been closer. So that's it. Have a good night. Thanks for listening. Thanks for all your comments. Some of them are very funny too, which I appreciate with the with the microphone and the voice and everything. Nothing like some good humor. Okay, especially in the heat of a battle, you need that. So thanks for listening, people. Ciao.